In this video, I'm going to show you how the wealthy use real estate to explode their wealth. Now, the first idea that we're going to talk about here is this idea of leverage. Now, don't tell Dave Ramsey that we're going to talk about this because he doesn't believe in it. However, the truth is that a vast majority of real estate professionals over the years, very successful ones, have all used leverage. And so this is the way it works. Let's just take a hypothetical example. Let's just say you were going to buy a $250,000 house and you needed to put 20% down because you don't have to go buy the whole thing with cash unless you're Dave Ramsey. So you put in $50,000 of your own money, but yet you control this asset worth $250,000. Now, over time, just imagine this. So you've got $50,000 of your own money tied up into it. So just imagine over time, this asset starts to appreciate. Now, we saw this in the years 21, 22, 23. We saw increases in home values more than 10% over the course of those years, but let's just act like it was 10%. Well, that means that this $250,000 property has appreciated to be worth $275,000, right? This $275,000, but yet you only have $50,000 of your own money in there, and you've added an additional $25,000 worth of equity. This means you had a 50% return on the cash that you invested. You put in 50 and it grew because of that equity. It grew $25,000. And this does not account for things like depreciation, doesn't account things for like mortgage pay down or anything, or the fact that a resident, if this is a rental, the resident is actually paying for that mortgage. So this is how the wealthy use leverage, this idea of leverage, to grow their wealth without tying up all of their money. So that's point number one. Now you may say, Spencer, wait, I don't have $50,000, and that's okay. You don't have to have $50,000 just laying around to put into real estate. I'm going to show you what the next strategy that the wealthy use in real estate, and that is OPM, other people's money. And this is a great one because you can, let's just take the same example. If you have this $250,000 deal, you can go and raise the $50,000 from somebody who wants to earn money on their cash that's sitting around. So I've got a friend here in town, Adam, and what he does is he just goes and tells people what he does. He doesn't go out and say, hey, will you give me $50,000? Instead, he just tells people, hey, this is what I do. If you know of anybody who's looking to make a good return on their cash that's lying around, give them my name and number. He said, inevitably what happens is people will say, well, I've got some money laying around. I'd like to be an investor. And so the way you can do this, how do you pay this person? Well, there's one of two ways. One way, you can give them a return on their money. So you can borrow that money and give them a percent return. Could be 8 or 9% or 10 or 11 or 12%. Or you can just say, hey, I'm going to split the profits with you 50-50. Now, I have a good friend here in Birmingham. His name's Bruce. Bruce does this all the time. He's an appraiser and he's a renovations, a flip like expert. And so what he does is he goes and finds the money to invest in deals. He finds the deals, raises the money, and then he splits everything 50-50, all the profit with that person. Now, that also means that they would probably, if they lost money, then he would have to come up with money, but he hasn't done that to date. But you can either give a percentage of the earning to them, like a return on their money, or you can split the profit 50-50. But absolutely, this is a way that the wealthy grow their wealth by using real estate. They don't always use their own money. They sometimes use other people's money. We've talked about leverage. We've talked about other people's money. Now let's talk about some tax strategies that real estate investors use. One of them is just called depreciation. in its simplest term, what this is, let's just take this $250,000 house. Let's just say the structure minus the land is worth $200,000. This means that you're going to be able to take, for the next 27 years, you're going to be able to take $7,000 a year and offset your rental income by that amount. And that's going to lower your taxes, obviously. So this is one way. Depreciation is one way. The next way is 1031 exchange. Now, what this means is most real estate investors, what I have seen is they started buying maybe some single family residential, and then every once in a while they want to sell either the whole portfolio or a portion of the portfolio. So the way you avoid paying taxes on your capital gains for that real estate, if you want to defer that and just keep buying real estate, is you sell, but then you 1031 exchange it into your next investment property. And so you can move up. Most people usually move up. They're moving into apartments, or maybe they're moving into commercial property, but you avoid capital gains. And you can keep using that money instead of paying taxes and giving money to the government. You can keep using that to buy more property. And next is 1031 exchange. And so the way I would explain this is if you had this $250,000 property and it went up in value, like we were talking about earlier, it's now worth $300,000 and you sold it. Well, typically you would have to pay taxes on the $50,000 of appreciation that you earned. You would have to pay taxes on that $50,000. But when you 1031 exchange it and you roll it into another piece of real estate, let's just say you went and bought an apartment worth $300,000, you wouldn't have to first pay taxes on your profit, that capital gains. When you 1031 exchange it, you're just deferring any kind of gains or paying taxes on that, and you're just moving up. And so this is how real estate investors pay no taxes when they sell real estate and they're buying something else. So what you're seeing is that in real estate, investors have multiple ways to earn a return on their investment. It's not just one way. It's not just you're buying a stock and hoping it appreciates. Here you have 4 ways with real estate. Number 1, you do have appreciation, which we've spoken about. That's great, appreciation. Number 2, we also have your loan pay down. So if you have this place rented, your resident is paying the mortgage down while the value of the property is appreciating. So there's 2 ways just there. Next, you've got cash flow. If you've rented this property, then you should be receiving some type of cash flow. And then 4th way, just what we mentioned here, tax benefits. So you see there's 4 different ways that investors are using real estate to build wealth and put money in their pocket. And it's a lot better than just having one way to do it. This is why real estate, for most of the wealthy people around the world, is their preferred vehicle. The next thing I want to talk to you about really is a mindset shift. It is no longer, so you can't be focused on short-term profits all of the time. If you're going to be a successful real estate investor and explode wealth, guess what? Most of them think in years and decades. They don't think in months. What I've realized is that most real estate people, when they first get started, they're really just trying to make a little bit of money at the outset, right? So this is why a lot of people get into wholesaling, because it's quick. You're selling a contract. You don't have to, usually you're not buying the property. And so you're just interested in short term, making a little money here, little money there. And you're thinking, oh, if I can just build up enough to replace my W-2 income. That's the way a lot of people think. Then they get into flipping. And then a lot of them get into long-term holds. And once you start getting into long-term holds, guess what? You have to think long term because it's wealth creation. Just the 4 ways that I mentioned, the appreciation, the loan pay down, the cash flow, the tax benefits, all of those over time is what's going to make you wealthy. It's not what you can do in a year, in 12 months. It's what you can do over a decade that is really going to change your life. And so I just want to encourage you. A lot of people think short term. We have to, if you want to be very, very successful, you have to think long-term growth, long-term strategy, long-term when it comes to real estate. Most people want to know now, how do you get started in real estate? What are the very first steps that you take? So I'm just going to give you some very practical advice. And this is the way that I really got started. First I would say, find a mentor. I'm big on finding real estate mentors, people probably in your local market. Now, you can follow people on YouTube. You can listen to podcasts. I think all of that is great. So to some extent, those are mentors. But if you can find somebody that you know in person that can literally show you how they're doing their real estate transactions, that's going to give you a leg up. If you can actually go out to a property, and I'm thinking single family residential, if you can go out to a property and walk through it with them, hear what they're thinking about, like they're going to change this, they're going to do this, this is what they're buying it for. Mentors are great. Second thing is, I would just say, start small. Most people need to start in the single family residential space. This is the easiest place to start. You can start with one property. It may be you just need to find a wholesale deal. Maybe you just need to make your first $5,000 or $6,000. I mean, just talking to Adam, my friend, this is how he started. He started with little money and he was just out there finding deals, and he started flipping some wholesale deals. And before you know it, he figured out that he could probably flip a property, do the rehab. So I'm just thinking, start small, find a mentor, start small. 3 is be patient. A lot of people are trying to make a quick, fast dollar, and it doesn't really work like that. If you want to get wealthy with real estate, it is a long-term game. There's no get rich quick. It's get rich slowly over time. So be patient. I would say when you're being patient, go ahead and set goals. What people realize is that we tend to overestimate what we can achieve in a small period of time, but we underestimate what we can achieve over a long period of time if we're just persistent and we're just dedicated to taking small, simple steps. But in this whole process, you have to be very, very patient. Another way that I've seen people succeed is if they didn't want to go the wholesale route, I've seen them house hack. House hacking is great. If you can buy a property and rent out a portion of that, whether that's the basement portion, maybe there's an ADU in the back, or maybe you buy a duplex, you live in one side of it and you rent out the other. I have seen and spoken with lots of real estate investors who started just through house hacking. So I think probably 2 of the most simple ways to start would be wholesaling or house hacking. It just depends on which way you want to go. You can do both, but these would be some very simple ways to get started. And probably the last piece of advice I would give you right here is build a great team. Build a great team. And this team is going to be, maybe it's going to be an investor-friendly agent. Maybe it's going to be an attorney or your CPA. You're going to need probably a property manager unless you're going to manage them yourselves. So starting to build a team that can help you acquire properties, analyze properties, and manage properties, I think that's going to be really, really important. And it's real simple. All it takes is picking up a phone and starting your search. The good news is if you have a mentor right here, this mentor can help you build a team. I've heard this happens all the time when you have people that just they start sharing contacts, and people use the same closing attorney, or they use the same title company, or they use the same CPA. That's great. If you have somebody that you trust and they've got a great team and you can piggyback on that team, by all means do it. But these are the simple things that I would do just to get started. And then over time, I believe you're going to build the wealth that you really want. And there you have it. This is how the wealthy use real estate to explode their wealth. They don't have some secret that they've hidden. You can do the same thing. Now, if you want to learn how to become a millionaire through real estate investing, I want to encourage you to watch this video right here.